Shut up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Have your YouTube video quality set as high as possible. That way you can read the numbers a whole lot easier. Have a calculator on hand so we can do some easy math. If you have a question or a stock you want to go over live together, leave it in the comment section below. And finally, remember, this is not financial advice. This is all for entertainment purposes only. All right, happy Monday, everybody. Hope you enjoyed the not so long weekend. Back to normal here. Let's take a look at our open positions. XHB pretty much flat here, trying to get the 25, Marcus 52. Roku's up today, trying to get to 34. Both of our strikes are out of the money, so no worries about that one. SPY rolled it from December to January. Still, both strikes are in the money, so we'll probably have to roll this one again. IWM, same situation. We're getting close to 20. Both strikes are out of the money. So far, so good. And XBI kind of hanging out in no man's land. Could go either way. May have to roll. Maybe not. We'll see. All right. Happy Monday. Lots to go over. Lots in the news. We'll start off with Boeing. Boeing itself, I know, has earnings coming up, so we're not going to make a trade on this. I just want to check it out and see what the options are pricing in. So gap down 8% today. Is rallying back a little bit. I think it was down almost 12 or 14% pre-market because of the news that happened, I believe, on Friday with the Alaska Airlines flight. So earnings are on the 31st. That's too close for me to open a position, just as I'd like to avoid earnings if possible. I just want to see what the options market's pricing in for February expiration. On the put side, so remember, this is going to include the volatility from this past weekend and option earnings coming up. So on the put side, you'd want to sell the 205 and buy the 200, or sell the 205 straight out. That's 237 minus 176 divided by 2 divided by 500. 6% on the put side. So definitely a lot of volatility has gone into these prices to get a 6% with earnings coming up and the gap down this morning. Call side, if you sold 255 and bought 260, it's 247 minus 176 divided by 2 divided by 500, 7% there. So interesting, very interesting. Like I said, if it's already bounced back a little bit today. If this can continue up and then gap up after earnings, I'll sell the call spread then. Or if it continues down and gaps down for earnings around the 200-day moving average, it may be interesting to sell the put side. I don't know. Interesting. But what is more interesting is the pin action from Boeing. So we're going to look at Spirit, SPR. They are the ones that actually manufacture the door and the plug that keeps the door closed and the aircraft in general. So that one was down. It's down 11% right now. Got to bounce around here. Earnings for them are February 7th. Some volume today. This is probably more volume than normal. But still 10-cent spread. It's not as liquid as you'd like. Put side, you'd want to sell the 22. Call side, you'd want to sell the 34. I think we'll pass on this one. Alaska, ALK. So Alaska Airlines was the flight that had the issue. Earnings are January 25th. Too close on this one too. As we get into earnings season that starts this week and we move on, we'll have a lot of more stocks and options that are past earnings. It'll give us more opportunities to open new positions. We're just at the very beginning of earnings season, and it's hard to find a stock that's not reporting soon. Put side. Look at this, 10,000 today on the 30. Interesting. 30 is down all the way down here. Man, it's tempting. Earnings are the 25th. We're too close to earnings. If we weren't so close to earnings, I would sell the 30 for sure. We'll have to hold on that one. Let's look at American Airlines. They got an upgrade today, and they're up 4%. Morgan Stanley upgrades American to overweight. Earnings, though, are on the 25th. Had this big move down. So a rebound, hit the 200-day and came back down. It's hitting the 200-day again. Maybe continuation down again. Or this time it'll break through. I don't know. Again, we're too close to earnings, so we're going to move on from this one. Next, Southwest, LUV, I believe they got a downgrade today. So upgrade on American, downgrade on Southwest. Bernstein downgrades to underperform and cuts to 24. Earnings, the same thing on the 25th. So after we get past all these airline earnings, then we'll take a look and see if there's any bigger than expected moves. Then we'll go in and sell the options, okay? Next, Apple. Up slightly today. Last week, opening week of the year, they had a very down week. So we're expecting some rebound, which looks like they're getting today. Earnings are February 1st. Yeah, so last week, big movement down. Hit the 200-day and is bouncing today. So should have sold puts on Friday. If you did, you're already making money. Okay, next we'll look at the K-Web and Alibaba. Let's do Baba first. I know it's down. It was down pre-market. Waiting for it to get to around 64-ish to sell puts. We're not there yet, but it's on its way. K-Web is an internet ETF for China. Baba is included in this, amongst others. But again, not a lot of volatility over here. And same thing, it's still stuck in this channel. I'm waiting for it to break down and sell some puts, or break up and sell some calls, but nothing yet. So we'll move on. Just wanted to do a quick check on that one. Let's look at oil. Down 5% today. So we made I think a USO trade or an XOP trade back in December. We sold some puts, moved back up, made our money. Hopefully can do the same thing around. If USO can get to 61.5 or 62 even, I'd go ahead and sell puts then. You've got this ascending trend line. Should get a bounce, whether it's sustained or not, I don't know, but should get a bounce around 61.5, possibly even 62. Okay, so we'll keep an eye on this. I don't know if I'd want to open the puts yet. If you did, you'd want to sell 58. Good liquidity here. If you sold at 58 and bought 54, that's 61 minus 29. Divided by 2, divided by 400, that's 4%. Call side. If you sold 73 and bought 77, it's 81 minus 37. Divided by 2, divided by 400, 5.5% there. So if you think the downside is going to continue, sell that call spread. Selling 73, buying 77, risking $400. Let's look at XOP. You might get paid a little bit more there. For XOP on the downside, we got to wait for it to get to around, I don't know, 124, 123, and then sell the puts. Break down below this low here on the 12th of December. Continuation down and then sell some puts. Around 124, 125. But we're not there yet. Put side, if you sold 120 and bought 115. 110 minus 60 divided by 2 divided by 500, 5% on the nose. Considering this is an ETF, that's not bad. Let's move on. Nvidia. Haven't looked at this one in a while. It's up 5% today. Can't remember what the news was today. Earnings of the 21st. We got plenty of time there. Over a month. Looks like it's at an all-time high, too. So when I hear all-time high, I think sell call spreads. It's had this incredible movement up last year. Not a lot of volatility. So you have to be careful here. On the call side, if you sold, you'd want to sell 570. Or sell 575 and buy 580. It's 535 minus 465 divided by 2 divided by 500. 7% there. Earnings are in this week, so that expiration has more volatility priced in. February expiration doesn't include earnings, so keep that in mind. I'll pass on this one. Next, RCL, Royal Caribbean. I thought they were in the news today. No news. All right, never mind. We're going to skip this one right away. Let's look at next Abercrombie and Fitch, ANF. Earnings are February 28th, so we got plenty of time. And Lulu raised holiday outlook. Guidance. I think they issued some guidance today that was better than expected. That's why they're up so much. Okay, so earnings are the 28th, and the guidance is there. Holy smokes, what a chart. It's moved from, 29 to 97 with hardly any pullback. Yikes-o. On the call side for February, you'd want to sell 115. There's hardly any volume here, though, so you don't have enough liquidity. I'd want to sell the call side here, but hold on it. Put side, you'd want to sell 80 and buy 75. Same thing, not a lot of liquidity. Question. Lacey writes, "Hi Steve, what do you think about opening a position on JPM before earnings?" Good question. I know, so yeah, JP Morgan I think has earnings this Friday. Usually I don't like opening positions before earnings just because it's a binary movement, so you can't predict it. But what's nice is that the options prices do include the historical movement into their prices. So if there's no movement, volatility sucked out of both sides. When are earnings? The 12th. So Friday before the open, JP Morgan has earnings. Here's the chart. Big move up here and movement down today. I'd want to sell the call side if I had to before earnings. I'd sell the 180 and buy the 185 for February expiration. You don't want to go close to expiration near earnings. What's it, 180? 121 minus 53 divided by 2 divided by 500. Almost 7%. So yeah, Lacey, good call on this one. We'll check in with it on our Thursday show. If it's near or at all-time highs here, so say Thursday morning, it's right up here, say at 175 or whatever. I would open a short call spread. I don't know what the strikes would be at this point just because it's a future date. But it'd be fun. I don't know. Thursday, we'll check it out. I'll write a note of it. JP Morgan, Thursday. Good question. I used to trade earnings a lot back in the day, but it's hard to sleep the night before. How about that? I don't enjoy it, but you want to give yourself some time, so I would still do the February expiration, even though earnings report is on January 12th, okay? We'll touch base on Thursday. Good question, Lacey. Moving on. Dell, D-E-L-L, up 4% today. I think got an upgrade. Earnings are February 27th, so good. We got some time. JP Morgan upgrades to overweight. Looks like Dell's at all-time high as well. Interesting. Call side. If you'd want to sell 85 but no volume to a liquid, we'll skip this one. Okay, let's look at CVX. Chevron, down 2% today. Jefferies upgrades Chevron to buy. 184 price target, but it's down. It's down because of oil, not because of the upgrade. Oil overall is down, 3% today? Earnings are on February 2nd, so a little less than a month away. It's getting kind of close here. I'd rather at this point, since it's not that big of a move, I'd rather wait for oil to sell off some more and then sell the put side on oil. So we're going to hold on Chevron. Okay? Dash, D-A-S-H, DoorDash. Up almost 4% today, but selling off slightly. We're getting close to earnings. Earnings are on February 15th, so it's about 5-6 weeks away. News on this one. Upgrade, I believe. Doesn't say. Let's just go with upgrade. How about that? Hitting resistance from back here. On the call side, you'd want to sell 115 and buy 120. Okay, liquidity here. You got an 8-cent spread here, 5-cent spread here. That's not bad. We'll do the math. 147 minus 92 divided by 2 divided by 500, only 5.5. That's okay. Put side. 85 is a little too close and 80 is too far out. If you sold 80, bought 75, you're not going to get paid for it. 92 minus 53 divided by 2 divided by 500. Yeah, 4%. Skip this one. So we had the JP Morgan Healthcare Conference start today, and we had announcements from Moderna. No, sorry, Johnson & Johnson buying Ambrx. So it's up 100% today. Earnings are in March. So all-time high. Buyout, I think it was priced at $28 a share. So right now it's hovering around 27. I'm surprised it's not selling off more. But as far as option goes, it's moved so much there aren't enough strikes to pick from. So everything's going to be zeroed out. Nothing to do here. Some selling of puts at the 25. Or maybe buying. I don't know. Interesting. Let's see if J&J has any movement because of it. Nah, they're flat. We'll skip J&J. Earnings on the 23rd anyway. Let's look at Moderna, mRNA. They were on a tear the past week. Earnings are on the 22nd. So I believe Hitting the 200 day. So let's keep that in mind. Resistance from back here, August and September. If it hits through here, next resistance is 118 roughly. There's a lot of resistance at 116 to 118. Maybe we can go ahead and open the call spread here. I know maybe we tried it last week or there's some liquidity issues. I can't remember. So it looks like February expiration doesn't include earnings. So if we sell the February, we avoid earnings altogether. You can see there's a bump here for the February, the weekly here. If we sold 135 and bought 140, it's 193 minus 136 divided by 2 divided by 500, 5.7. That's not bad. Liquidity is the issue, though. You've got 187, 209, and a 13-cent spread here. Close, but no cigar, okay? Let's check in on gold. I think gold is down a bit today. GLD was down more. Ignore this tail. Put side for gold. If you sold 181 and bought 177, it's $400 spread. 48 minus 19 divided by 2 divided by 400, 3.6 on the put side. On the call side, it's probably where you get paid. If you sold 190, I don't know, 196 and bought 200, yeah. 106 minus 57 divided by 2 divided by 400, 6.1% there. That's not bad. 196 on the chart. $196 is up here. We have CPI tomorrow. I'll tell you what, if CPI moves this gold up pretty high to the 190s, like 193, I consider selling the call spread. Let's wait for CPI. All right, McDonald's, MCD. This is a follow-up from last week. We're waiting for it to get down to the 200-day. It's down slightly today. Fourth day in a row. It could catch a bounce, yeah, right around 283. We've got support here, back from November, and we're approaching the 200-day. So there should be strong support there at around 283, maybe even 284. So we'll keep an eye on this one. If it sells off $4 more. Earnings are February 5th. That kind of throws a monkey wrench into things. All right. Let's look at our IV rank scanner and sort by volume. SPY's off the list. It was on the list last week. Apple, we already looked at. AMD. We traded AMD last month. Closed recently. Earnings are on the 30th, so we'll stay away. IWM still high up there, 62 IV rank. Let's take a look. We have our position. We sold the 197 and bought the 200 for January expiration, so my strikes are still out of the money. Looks like it's catching a bounce from way back here. We'll see what happens. We could always roll this one. My strikes are way up here, 190, 197. We're close. We could definitely get back up there. I don't know. Just looking at the chart, though, I can make the case for selling the put side or the call side. So let's see what's what. For February expiration, if you sold 181 and bought 175. 117 minus 63 divided by 2 divided by 600, 4.5 on the put side. No bueno. On the call side, if you sold 208, this one's perfectly priced. Sell 208 and buy 215. That's a $700 spread. 133 minus 50 divided by 2 divided by 700, almost 6% there. So yeah, you're doing a $600 spread and getting $41 for it, almost 6%. So call side is where the skew is. Where's 208 on the chart? This one's interesting. 208's up here. That seems very fairly priced for what you're getting paid for. Interesting. I've got my position I've got to deal with still, so no new position for me here. Boeing, we already went over. Amazon, I think, has earnings coming up. FXI, we already looked at. China. Ford, no. Marathon Digital's down again. Bank of America has earnings on Friday as well with JP Morgan. We'll tune in Friday morning for bank earnings to be kicked off. Meta, Microsoft, no. Coinbase, no. Citi has earnings next week. SoFi, Riot. PayPal's up today. Intel has the event today and earnings on the 25th. American, we already looked at. Exxon. Let's look at Exxon. Same thing here. Waiting for like CVX and the ETFs. Waiting for a breakdown past here. Could catch a bounce. Good Lord. Tough one on this one. Hard to say will it catch a bounce. I'd rather trade than XOP or USO. Next, JP Morgan. Hang on tight, Lacey. We'll look at something on Thursday for JP Morgan. Emerging market ETF, Google, QuantumScape, Cytokinetics. That's an interesting one. What's their event today? Oh, they're at the healthcare conference. Good for them. CYTK. Huh. They had the buyout offer. They continued to move up, and now they're selling off. I wonder what's going on. Earnings are on the 28th, so that's after February expiration. Cut to equal it by Morgan Stanley earlier on Friday. Call side? Anything? Not too illiquid. You'd want to sell the 110. You've got a 90-cent spread here. Zero volume. Close. UNG, Snapchat, Clean Spark. Next page. Verizon has earnings on the 23rd. Affirm, let's check that one out. We've traded Affirm before. Up 3% today. Earnings are on the 7th. We're almost exactly a month away. We got some time to get in and out. You can catch resistance around 45.5. We're not there yet. Hold on this one. Spirit, we already looked at. And not Spirit Airlines, Spirit, the manufacturing company. GDX, Bitcoin, Fisker. AT&T has earnings on the 24th. Pfizer, earnings on the 30th. Peloton, yikes. JD, we'll hold on those Chinese internet stocks. Chevron, we already looked at. SB, what is that? I don't know what that is. Skip. Disney, earnings on the 7th. for Disney. What a shame. DIS. Earnings are a month away. Not a lot of volatility, a little bit. I wonder why it's on the list. $30 divided by 15. Skip the put side. Call side. 14. Maybe the call side. 100's a little close here, though. 114 minus 52 divided by 2 divided by 500. 6.2%, but like I said, the 100's awfully close. It's a 10% move. 100's up here. What the hell? Earnings are, I think this is just included earnings volatility. That's why it's so expensive on the call side. We got some time. We got a month. Too chicken, though. Moving on. Netflix, no. Spirit Airlines, the airlines, no. ARM, up 5% today. Earnings are the 7th, so same story. We got about a month till earnings. No news on this one. Again, this is a relatively new stock, so there's not a lot of historical chart data that we can use. If you sold 85 and bought 90. 147 minus 93 divided by 2 divided by 500, 5.4% there. Seems like that's awfully low. 57.5. You sold 57.5 and bought 52.5. It's 88 minus 35 divided by 2 divided by 500, 5.3. So balanced on both sides. Pass. KRE. They're on the list because we've got the bank earnings coming up, so even the ETF's going to have a little volatility. But it's just, I know the chart. It's hanging out in no man's land. We already looked at Alaska, Walgreens, at the healthcare conference. Let's take a look. WBA, I like the put side on WBA. Up 3%, so maybe we missed it. Earnings are at the end of March. Here's our chart. Should have sold puts after earnings. Would have been out of it already. Kind of missed the boat on this one. My bad. You'd want to sell 22.5 and buy 20. 24 minus 6 divided by 2 divided by 250, right? Yeah. 3%. Nope. Skip the call side. XBI. We're in XBI already. Let's take a look. XBI, biotech ETF. So my position is January expiration. We sold the 85 and bought the 90. So one of the strikes is in the money, getting close to the 90 being in the money too. We sold the call side today. For February, sell 99 and buy 103. Or 104 is fine. Let's do 99, 104. That's 91 minus 39 divided by 2 divided by 500. I messed it up. Hold on. 91 minus 39 divided by 2 divided by 500. 5.2% there. Okay. May have to roll this one this week. Probably will. Yeah. Anything else? Kind of coming to the end here. Robinhood? No. USO we already looked at. We're getting close on this one. ARC. Take a look at USO one more time, and I want to jump the gun here. It's tempting though. Man. I'll just go ahead and sell this. We want to sell the 60, right? Let's go ahead and pull the trigger. I'm impatient. February selling 60. Well, actually, not enough. Sell 59. Sell 59, buy 55. 69 minus 32 divided by 2 divided by 400, 4.6. So I could sell 59 straight out. Maybe I'll just do that. 59 on the chart. 59's down here. I'm going to do that. Okay, so check it out. I'm just going to sell the put without buying the call farther out put. So just so you know, this is my trade, but when you sell puts, they either need to be cash secured or you need to have level 3 or 4 options in order to not buy the 50 whatever down below. So if you've got $5,900 in your account, you can go ahead and do this. It would be cash secured. Otherwise, you need to have level 3 or 4 option approval from your brokerage account, okay? So I will go ahead and sell for February expiration. One put, so I'm going to sell one February expiration 59 put. Go ahead and go for the ask of 69. Receive a credit. We'll preview this. I take it to 70 now. Double check the ticket. Sell one February expiration 59 put. Limit at 70 to open. Receive a credit of $70. Going to go ahead and send that out. The hangout here, if this gets filled today, I'll set a buy to close order at 35 cents. Okay. Again, like I said, needs to be cash secured, which it is for my account, but I also have level 4 approval for option trading as well. So just keep that in mind, the risk that you're taking. There's always risk and reward. You need to balance out yourself. Okay. I think that'll do it for today. Welcome to the channel, Bill. Good to have you aboard. Hope you're tuning in. Thanks so much for watching, everybody. Tune in every morning, 7:15 a.m. on the West Coast and 10:15 a.m. on the East Coast. We go live every morning trading options. Also tell your friends who are trading to like and subscribe as well. All right, we'll all trade options together. Thanks so much for watching. Have a happy Monday. We'll see you all tomorrow for CPI.